All right, so one of the most important tech companies on the planet just had an absolutely insane year. We're talking record-breaking. So in this explainer, we're going to decode the playbook behind that performance. And, maybe even more important, we'll look at their huge multi-billion-dollar plan to basically lock in their top spot for the next decade. Let's get right into it.
Okay, so it all kicks off with this one number that just made everyone in the industry's jaw drop. 35.9%. That's not a typo. That's the company's massive full-year revenue growth in 2025. Look, this isn't just a good year, This is a sign of a huge shift in what people are demanding, and it really shows who's leading the pack. So the big question is, how on earth did they pull this off?
To really get a grip on that huge number, we've got to zoom in a little bit, right? Let's look at the most recent quarter. Because these results, they show the incredible momentum the company had and how they just powered right through the finish line of a truly historic year.
And get this, even in the final stretch, they didn't slow down one bit. In the last quarter of 2025, revenue still went up another 1.9%. I mean, that shows just this relentless demand for their top-tier tech. And that's on top of a year that was already exploding with growth. It's wild.
Okay, now for this number, 62.3%. That was their Q4 gross margin. And this is about way more than just making sales, This is a measure of just crazy efficiency. It basically means for every dollar of product they sell, a huge chunk of it is pure profit. That tells you they have totally mastered their costs and are running their factories absolutely flat out.
And that efficiency, it flows right down to the bottom line. 54% operating margin. This number shows just how good they are at turning all that revenue into actual profit, after all the bills are paid. It's just pure operational muscle right there on the screen. So yeah, the financial results are obviously amazing, but what's really driving all this? What's under the hood? Now we're going to go inside the growth engine and figure out exactly what tech and what markets are fueling this incredible run. Okay, this is where it gets really interesting. It turns out the company's most advanced, most complex tech is what's bringing in the big bucks. If you look at this chart for the whole year, their 3nm and 5nm chips, we're talking the smallest, most powerful stuff they make, that alone was 60% of their revenue. And if you add in everything that's considered advanced tech, so 7nm and smaller, you're looking at a whopping 74% of all their sales.
So who's buying all this cutting-edge stuff? Well, the answer couldn't be clearer. A crazy 58% of all their revenue in 2025 came from high-performance computing, or HPC. And what's that? It's the engine that's powering the global AI boom. It's the hardware inside those giant cloud data centers. Yeah, smartphones are still a huge part of the picture, but make no mistake, AI is now the #1 thing driving this company's success. Period. But here's the thing. This company is not just sitting back and counting the money. No way. They're taking all those profits from the AI boom and placing a massive, colossal bet on the future. So let's break down exactly what their investment strategy is to make sure they stay on top.
Just look at this jump in spending. It's incredible. After spending almost $41 billion on what's called capital expenditures in 2025, that's money for new factories and equipment, they're planning to crank that up to between $52 and $56 billion in 2026. This is not just a little budget bump. This is a massive statement. They are building the foundation for the next wave of tech.
And here's the thinking behind it. This comes straight from the company. They see all this spending as a direct investment in future growth. Basically, they're betting billions that these huge trends like AI and 5G are going to require even more powerful chips down the road. So they're building the factories now to be ready for that demand. So where is all this cash going? Well, about 75% of it, 3/4 of that massive number, is going straight into developing and building their most advanced tech. This is a super focused, strategic move to just widen their lead at the very, very top of the industry. But, building the future at this scale, it's not just ambitious, it's insanely expensive, and it comes with some serious challenges. This massive investment plan brings a lot of new, rising costs that the company has to figure out how to handle. So let's talk about these headwinds, right? First off, building new factories in other countries, that's expensive, and it's going to hurt those amazing profit margins, at least at first. Second, getting a brand new technology like 2nm chips up and running is always super costly in the beginning. Then you've got inflation hitting everyone. And on top of all that, the tools you need to make these new chips just get way, way more complicated and expensive every single time. So yeah, the pressure is coming from everywhere. Which of course brings us to the multi-billion-dollar question. With all this spending and all these rising costs, how can they possibly keep up that incredible profitability we were just looking at? How does that work?
Well, they have an answer, and it's a clear one. Even with all these challenges, the company has laid out a really disciplined, long-term plan to make sure all this growth stays super profitable.
And here it is. This is their promise. Even with all those crazy cost pressures, the company is aiming for a long-term gross margin of 56% or higher. I mean, in the current economy, that is an unbelievably bold statement. It shows just how confident they are in their strategy and the value they bring to the table.
And look, this isn't just them hoping for the best. They've got a concrete plan. First, they're using strategic pricing, basically charging for the incredible value their tech delivers. Second, they're working with all their suppliers to get costs down. Third, they're just going to keep getting better and better at manufacturing to squeeze more out of their factories. And finally, they're committed to keep raising their dividends for shareholders, which really shows their financial discipline. It's like a full-on attack on inefficiency from every angle.
So when you put it all together, by investing these record amounts of money while also having a super clear plan for staying profitable, this company is doing way more than just enjoying a good year. What they're really doing is aggressively trying to build a giant, uncrossable moat around their business. And the big question we're all left with is this: is it going to be enough to create a lead that no one can ever break?